What is up guys, my name is Ignas, welcome back to the channel. This week we compared 3 names from the specialty machinery industry, and now I would like to take a deeper look into one of those picks. So the name is 3M, ticker symbol MMM. This year the stock is going downwards, minus 30.88% on the year to date, and then if we zoom out to the last 5 years, the stock went from $232 back in 2017 down to $222 today, lower for 47.09%. With this considerable decrease, the company's market cap is now at $67.9 billion US, but at least the price-to-earnings ratio is getting better now at 10.7 to 1, and the dividend yield is going up there, currently at 4.85%. So we have picked this stock for our dividend portfolio, but let's check if it's worth adding into it, or if we should consider other opportunities elsewhere. So today we are taking a look into 3M's financials and fundamental ratios, next year's price action expectations from analysts, what Superinvestors and insiders are doing with it, then we'll take a look into the technicals of the price chart, and lastly I'll share my current position on it on Revolut. An early thumbs up would be greatly appreciated, and with that out of the way, let's begin. So first let's take a look into revenue, and this is 3M's history of the last 5 years. Back in 2017 they were bringing $31 billion US on the trailing 12 months. Then in a year in 2018 that went up to $32.8 billion. Then in 2019 we saw it going lower to $32 billion. And then with the worst quarter of $7.2 billion in the middle of 2020, revenue for the trailing 12 months came in at $31.4 billion. So that was the worst quarter of the last 5 years, down 12.18% year over year, but afterwards it did accelerate up nicely. In 2021 revenue came in at $35.3 billion, and this year there is a bit of a slowdown to $34.8 billion. Still, the most recent 8 quarters have been way higher to what we have seen before 2020, though it has been slowing down from the highs of 2021. Now the second metric we are taking a look into is the price-to-earnings ratio. So back in 2017 it was at 19.92, then in 2018 with the price moving sideways, but earnings per share going a bit lower, price-to-earnings increased to 24.49, then in 2019 we saw the price moving a bit lower, so price-to-earnings dropped to 19.43, 2020 P/E ratio again lower at 16.61, with earnings going higher in 2021, P/E ratio stayed pretty much the same at 16.52, but this year as we saw the stock bottoming at $110 per share and earnings climbing to the highest of the last 5 years, we saw the price-to-earnings ratio bottoming at 9.63. And now with the price climbing just a bit higher, P/E ratio went over 10 at 10.7. So with the stock price consistently moving lower and earnings going higher, we now have the price-to-earnings ratio at around 10, which is pretty much the lowest it has been in the last 5 years. Now let us take the number of shares outstanding. So back in 2017 that number was at 613 million shares, then in 2018 it was down by 2.45% to just under 600 million. In 2019 another decrease by 2.51% at 583 million shares. And in 2020 a small decrease of 0.17%, taking the number of shares out at 582 million. There was though a small increase in 2021 to 586 million shares, but with the most recent quarter in 2022, we had another decrease of 2.73% and the number of shares out at 570 million. So in the last 5 years the number of shares out has been going lower, from 613 to 570 million, meaning that in 5 years 3M bought back around 33 million shares, which at the current price of $123 per share would be a stock buyback of $5.3 billion US. That's probably around 7% of the current company's market cap. This week we already checked into 3M's dividend metrics. I will leave a link for that dividend comparison in the description below, but I still want to bring up one ratio that looks to be very promising. So we are in my stock watchlist on Google Sheets, and here is the tab for 3M. We have its dividend yield history for each quarter of the last 5 years, and out of that we calculate that on average in 5 years the stock was trading at a dividend yield of 3.26%. So the worst time to get into the stock was back in 2017, at a dividend yield of 2.02%, under the 5-year average for 38.1%, but the yield has consistently been moving higher, and it is currently at 4.74%, way over the 5-year average, higher for 45.25%, way over the 5-year average, up for 45.25%. So getting into the stock right now seems to be a decent opportunity, at least for the dividend yield, which is currently at the levels we haven't even seen in the last 5 years. Now, if you would be interested in doing a similar analysis on another dividend-paying stock yourself, you are able to access this dividend watchlist by following the second link at the top of the description. Otherwise, feel free to add a ticker symbol in a comment below, and I'll consider adding that into the watchlist myself. Maybe you could share some interesting opportunity available in the market that I'm still missing. So we have checked into 3M's history, but how about expectations? Where do analysts think the stock will be trading at next year? Here we have information from 18 price targets of analysts. Target prices range from the lows of $110 to the highs of $210 per share. The average out of it is at $129.73, and currently the stock is trading at $122.86. If we assume that next year the stock will be trading at the average analyst price target, then for 2023 we are looking into an increase in the share price by 5.6%. Now let's take another angle. Here we have earnings per share estimates from 18 analysts for next year. So if we assume that next year the price to earnings ratio remains the same, then for 2023 we are looking to an increase in the share price by 2.4%. So overall, Superinvestors are a bit bullish, but not by a huge amount, expecting that the price of the stock next year will be going up from 3 to 6%. Now the next part I want to take a look into are Superinvestors. Currently 5 funds are holding the stock, and 4 of those have actually reduced on their positions. So the largest sale was from Jensen Investment Management, where they decreased their position by 22.83% and are now holding 2.5 million shares, which takes 2.71% of their portfolio. Now the second largest reduction percentage-wise was from Maverick Capital. They decreased their position by 20.98% and are now holding 3.2 thousand shares, which is 0.01% of their portfolio. So overall, Superinvestors seem to be really bearish, not one fund added into their position, and there is only one fund that just keeps on holding without reducing on theirs. Now let's also take insiders, and the sentiment here is identical. In the last 6 months, insiders made 0 long transactions, but then they managed to sell for 38 times, totaling to a value of $9.3 million. So insiders seem to also be bearish, selling for quite a few times, but putting 0 money back in. So for the last part, we'll take a look into the price chart. Back in April and May, the stock was bouncing along the 50-day moving average, but then in June it started moving even lower than that, and by the 17th reached the lows of $129 per share. The relative strength index was oversold at 24, and the 12-day moving average of the MACD was way under the 26th one. Now we saw it going sideways for a while, but on the 30th the 12-day moving average of the MACD crossed the 26th one to the higher side, and the relative strength index also climbed over 30. A week or 2 passed, and we finally saw more positive price action. The stock went over both the 50 and the 100-day moving averages, kept on going strong until the middle of August. Relative strength index wasn't overbought at 75, but we already saw a slowdown in the lines of the MACD. And then on the 18th it did cross lower. After a week we had this huge red candle, where the stock lost around $15 per day, again dropping to $129, but then after still continued to go lower. We bottomed in the beginning of October, close to $107 per share, with a relative strength index close to 30, and almost no distance between the lines of the MACD. Though the price has been shooting up recently, it seems to have bounced under the 100-day moving average, relative strength index is going back lower, and the distance between the MACD lines is also getting shorter. So it may well be that we are turning to the lower side again, meaning that I am looking at a support of $109 per share. So we went through all the metrics I wanted to take a look into, and now let's make a quick recap of what we found. Revenue has been continuously moving up, especially increasing in 2021, though we have seen a bit of a slowdown recently. Since the stock price is moving lower this year, we also now have the price to earnings ratio the cheapest it has been in the last 5 years. 3M is also continuously buying back shares, as in 5 years in total they decreased their number of shares out by 43 million. Also, their dividend payout is going higher consistently, and its current dividend yield is now 45.25% higher than its 5-year average. Analysts see the stock going higher next year, estimating for the share price to go up from 2 to 6%. Though that doesn't convince Superinvestors, as they together with the insiders have only been selling out of the stock. Looking into technicals, it's not promising right now. Both the relative strength index and the MACD are pointing lower, and we just had a bounce under the resistance of the 100-day moving average. So I'm waiting to check how the stock acts at the support, which is currently at around $109 per share. So I do currently own 3M. The position is now worth just over $220 per share, and it takes 3.27% of my portfolio. Even though we just checked that the price could be going lower in the short term, I'm not selling now as I want to keep on to my dividend positions. But also maybe now is not the best time to be adding into the position, as I believe we will be testing the support of $109 per share, so no rush getting in right now. What do you think? Are you holding 3M in your portfolio? Share your experience with this stock in a comment below. Also, don't forget to support the channel and leave a thumbs up under the video. Last week I've looked into several other companies, so if you are interested in any of these, then click on a video that is currently on the screen. And that was it from my side. Thank you for watching, and I will be seeing y'all in the next one.